Hey listeners, I just hosted Geoff Kendrick, head of digital asset research at Standard Chartered, on the show. Standard Chartered is a large UK-based bank, and Geoff has been a presence in the media, largely for his Bitcoin analysis. But given the growth of Solana, Geoff wrote a SOL forecast giving his estimate of the asset's price at the end of this year and in years to come. We get into how Geoff goes about valuing SOL, what he thinks will come after meme coins, and what financial institutions think of Solana. Let's get into it. Nothing said on Lightspeed is a recommendation to buy or sell any investments or products. This podcast is for informational purposes only, and the views expressed by anyone on the show are solely their opinions, not financial advice or necessarily the views of Blockworks. Our hosts, guests, and the Blockworks team may hold positions in the company's funds or projects discussed. Hello and welcome back to another episode of Lightspeed. I'm your host, Jack Kubinek, joined today by Geoff Kendrick, head of digital assets research at Standard Chartered. It's a UK bank, and Geoff just put out the bank's first Solana forecast. It estimated SOL will go to $275 by the end of 2025 and $500 by the end of 2029. So we're going to dive into that, how he thinks about valuing SOL, maybe how SOL compares to ETH. It should be a good episode. Very excited. Geoff, thank you so much for coming on the show.
It's a pleasure, Jack. Always good to join.
We're going to get today a lot into just how do we value L1s? How do you go beyond just hype and narrative, and what actual numbers should we use to think about what these things should cost? And we're going to have similar conversations at Permissionless. Woo! Happening June 24th to 26th in Brooklyn, New York, in Industry City. Come down to my neck of the woods. You know, ticket prices are going up, but you should grab them now. Use the code Lightspeed10 for 10% off at checkout. There's going to be a Lightspeed 0x research happy hour that lots and lots of folks are going to go to. It's going to be a great time. So we'd love to see you there as well. And I've been just looking through some of the content we have planned for the conference. It's going to be really, really stellar. You're not going to want to miss out. I hope to see a lot of you there. But with that quick plug, Geoff, we'll get into more of our meat for the conversation today. So first Solana forecast. You know, I've seen you in the crypto headlines now and again talking about Bitcoin, maybe talking about ETH a little bit. Why was now the time you wanted to put out your first SOL forecast?
Yeah, that's a good question. So as I try and build out some extra coverage on new coins this year, which is something I've been trying to do in the background. Obviously, mostly I've been covering BTC and ETH, and it really was time to start covering some of the other layer ones, etc. So I've built out a few others recently, partly with the purpose in the background to have extra things to compare Solana against, right? So obviously Solana was the big story 2023 and even 2024, but now that I've built some other stuff out, I felt like I had some metrics against which I could compare Solana, particularly around activity, etc. And it also feels like some of the layer ones are at perhaps quite an interesting turning point in 2025. And for Solana, if, you know, obviously we're going to get into the detail, but it feels like we're perhaps post peak meme coin, and obviously that's been driving activity. And so maybe there's a bit of a potential pivot here, and so hence the reason to finally get across some forecasts for Solana, which, you know, has been quite a bit of take up in the last week or so on the back of that.
So your price prediction was like bullish, but it also belongs in a context, I guess, of how you're valuing other coins. So let's just say, like, lay out for me your most bullish case for Solana and your most bearish case, and what would contribute to both of those outcomes.
Yeah, so in 2024, and sort of, let's say, up until when Trump took seat in Jan, obviously most of the activity on Solana has been on the back of meme coin trading, right? So all of the, let's say, very, very fast move, you know, thousands a day. At one point, there were 60,000 new coins coming out on Solana's main meme coin exchange, pump.fun, and then some going on to Radium. But like that sort of dominated the space, right? So you can then have either one of two positive scenarios. One positive scenario for me, quite frankly, would be if the meme coin story continued in 2025 and 26, something that looks less likely. But in theory, the meme coin trading could just continue as it had done. And quite frankly, I don't really mind where the activity comes from. Like in terms of valuation, I want activity. Yeah, so there had been a lot of activity that's fallen off just now. But I mean, look, if that picked up, that could be positive. Another even more positive version of the story would be we've had meme coins. They have tested the rails in Solana. You've had very high transaction volumes, etc. Very, very quick, cheap stuff. And the other things that should lend themselves to Solana could come together more quickly. And there I'm thinking like social, for example. I'm thinking like tokenized equities, something like that. So fast turnover, low transaction things that could replace meme coin trading. That'd be massively positive. I think that's going to take a number of years in my base case. And so that's why I'm less positive. But if you had something like that, you could say instead of 275 this year, you could be talking about 450, something like that, like much more positive. Again, I think it's unlikely, particularly on things like tokenized equities, that comes through anytime soon. So hence less constructive. On the negative side, you would say we could now be in a space where we've had meme coins and there's nothing that's going to replace them. That's sort of where I am, but the debate is how long, and can markets create a bridge or like an emotional bridge, if you like, to get to the new earnings or new activity. I think we're sort of in the middle. Like it'll take a year or two until you get more activity that's not meme coin driven. But in theory, that could also be wrong, right? So you could either have, let's say, Sui could get that new activity. And if you saw signs of that, then that would be negative Solana. And then you could say, actually, Solana was just a one trick pony. It was just about meme coins. But I think that could be too extreme. In that scenario, you would possibly say, well, prices could even go down from here in absolute terms. But again, I think low probability, right? So where I've gone in my forecast is somewhere in the middle, which is we've had the easy times, which have been meme coin driven. We'd like to now create a bridge to the next use cases, which are high turnover, fast sectors like social or, my equity, tokenized equity example. But that could take time. So markets may be a little frustrated, etc. So activity comes a bit lower and therefore perhaps prices underperform while still going higher.
Yeah, I think that's a plausible world. I guess there's two assumptions there to dive into. I think the first one is just that you sort of make the case that meme coin volume is unsustainable. And I'm not entirely sure if that's the case. So I pulled some data before this from Blockworks research. So obviously, post-election, meme coin trading on Solana skyrockets. The amount of income to the blockchain, so the fees and tips being created by just trading that went to validators and to stakers and so forth, also elevated to like really high unsustainable levels. But where things have leveled out the past few months is still pretty notable trading activity. So meme coin trading volume has increased each of the past 3 months from a low of 45 billion in March to 75 billion in May, which we just finished up. And that puts us ahead of, let's see, prior to October, the highest meme coin volume month in 2024 was July at 45 billion. So it's like the floor today is the ceiling of mid 2024. So I guess I would question whether meme coins are actually unsustainable. They're unsavory, perhaps. They're not the most existentially meaningful thing to be doing with block space, but they are a thing that the market seems to demand. It's unclear if some of this is wash trading or inorganic volume or whatever that is, but I would push back a little bit and ask you, what makes you think that meme coin trading is going to prove unsustainable?
Yeah, it's a good question. So I should say I do not have a problem with meme coin trading at all. I don't, whether it's unsavory or valuable is kind of neither here nor there to me personally. I think the fact that you have had very high activity and high fees associated with it is fine. So Where I do have an issue just now is, let's say the pass-through of meme coin trading has been a lot weaker. So you have the simple version of the story is you create a coin on pump.fun, and then when it gets up to 100K, it goes onto Radium. Like, obviously the story's not that black and white, but that kind of gives you a bit of a gauge. The activity of those coins that pass from pump.fun to Radium has fallen dramatically. So let's say we've got a high level of things starting out, but a lower level of those succeeding, I guess, is where that story goes to. Yeah. So much less so than where we were in Jan or November. So for me, if I was banking on meme coin volumes going back to where they were in January, I'd be a bit concerned. So that's sort of big bucket one, I suppose. Big bucket two is when I look at activity on chain, and the best measure, I think, is the total fees paid to the applications. So these are end users pay the applications that are built on, in this case, Solana. You add those together. Some people, including myself, have started to call that GDP as a measure. On Solana, you get that measure. And then if you do that on other chains and you compare to market cap, it appears that the market is discounting, even at the peaks, the activity on Solana more heavily than it has done on other chains. And there I compare against Ethereum, Avalanche, and BNB chain. And if you look at that type of measure, it's sort of like saying the market is suggesting that the activity should be further discounted than others. So best part of 100% meme coin trading activity is not able to sustain the Solana price to where it could have been. If it had have had the same sort of PE type measure as you had on other chains, we would have gone a lot higher actually earlier this year. So markets are also discounting the probability that it's sustainable. So those two things for me say, you know what, actually we could be in this period where meme coin trading remains, as you say, kind of where it was mid 2024. It doesn't push back to the Jan highs. That was quite crazy times around the Trump coin launch. And rather we start thinking about, how can this extremely successful chain be best used in other spaces going forward. But again, they could take some time.
Today's episode is brought to you by Ledger. Ledger is a secure hardware wallet for your SOL and logins, trusted by 7 million users, and securing 20% of the world's digital assets. It's built a robust ecosystem of products and services, making digital ownership more secure and accessible to everyone. Ledger's newest devices, Ledger Stacks and Ledger Flex, feature the world's first secure touchscreens, making it easier and safer to manage your Solana transactions and assets. With Ledger Live, you can seamlessly manage and stake your SOL and now your SPL tokens, all while staying secure. From Bonk and Pengu to Jupe and Ray, 130 SPL tokens in total can now be bought, managed, and swapped on the go via providers like MoonPay and Exodus from the security of the Ledger ecosystem. As always, investments in blockchain technology involve risk. Terms and conditions apply. Do your own research. I guess the other half of the story you're telling about Solana is we're in meme coin world right now. Solana is going to transition to other, maybe more social or serious kinds of financial services that are happening on chain, something like this. But that's going to take time, which I think is certainly fair. But do you have like a thesis for how exactly that plays out? Which types of apps are most likely to win? I think if you look at Ethereum, for instance, it's been, throughout its history, it's been a year away from being a year away from like all the and there's lots of like real world assets and stablecoins and things happening on Ethereum, but by and large, a lot of DeFi isn't doing real finance. It's kind of the circular yield farming loops and so forth. So I don't know, like, do you have a thesis for, I'm not necessarily super like, or I think a lot of crypto social is pretty doomed because like content is worth zero essentially. And there's some interesting like trading like social trading apps or things like that. But I don't know, are you opinionated on what these coming in 2 or 3 years new Solana apps that make use of its speed and scale, what those apps will look like?
It's always a difficult one because when you have network effects, which is obviously what this asset class is based upon, really, right? It kind of goes slowly and then it goes really, really quickly. So that's sort of more broadly how this happens. Is it even one of the social apps that are around now? I mean, who knows? To be totally honest with you, on social, I think at some point there will be a use case for a social network that replaces some of the Mag 7 versions of social, right? So is that 2024 or 2029? I mean, who knows? Like, so we've had a few get going, but not really do much so far. So I think that's a tricky one. The use case that I think, let's say, might be easier to paint here is the high volume, low size financial, like real world financial stuff. So there, I'm thinking of like tokenized equities. So the use case there is for those that can't get access to US trading accounts, for example, that want to trade NASDAQ stocks. You know, they could be sat somewhere in Thailand on their mobile phone and, you know, want to trade their favorite Mag 7. They don't have access to US account. They would like to get access to the most liquid financial market system in the world. And this asset class gives them that access, right? So we're seeing it already with stable coins, which I'll come back to in a sec, but perhaps we see it with actual tokenized underlying financial products like equities too. And that sort of comes through. And actually Solana, I think, makes a lot of sense for that space, more so than Ethereum or layer 2s. So the only thing really that is like real world so far in the entire digital asset class is probably stable coins, you could say, in size. And that's mostly Ethereum and Tron. I think that makes sense that it's mostly Ethereum, probably keeps being so. Like TradFi trusts Ethereum, they understand it, etc. But over time, like if you need something that's faster and cheaper, and quite frankly can get it done and is, you know, great for very low transaction size, it's sort of tokenized equities for retail investors in Thailand, to use that, play out that example. Solana makes a lot of sense. So I actually think that's the easy win. Social should come too, but like timing and who wins is very tricky on that.
So you spoke a bit ago about your preferred metric for valuing smart contract blockchains is what you call GDP, which is basically just the combined app revenue on these chains. And you use that to sort of make the argument that Solana's like future earnings are pretty discounted. I just want to hear more about that because I think we're having this conversation at a time where I don't know how much you personally are on crypto Twitter, Geoff, but crypto Twitter is alight with lots of debate, especially between the Solana and ETH world, about what metric should you use to value layer 1 tokens. Blockworks has this thing called REV, which basically measures fees and tips that are paid to get access to block space, and that's like income to validators and then to stakers. App revenue is a little bit different, but also obviously a way that value is created by L1s. So just walk me through why you think this GDP app revenue metric is the best way to think about how valuable an L1 is.
Yeah, there's I kind of come from one of two angles. So one, the simple angle is if you do it across a few chains, you get numbers that look somewhat similar. So that's super helpful, right? It's sort of like saying, and actually I don't have the PEs for stocks in my mind, but it's sort of like saying the PE for Apple is 10 and the PE for Microsoft is 12, and for something else it's 8, and it's sort of 15. So the numbers are kind of similar. You're not having like Apple PE of, in my made up numbers, 10 and like something else of 350. You know what I mean? So when you do this market cap divide annualized GDP measure that I'm talking about, you get similar numbers. Now, they're not 8s and 12s, they're sort of 50s and 100s, but still, you're kind of in the same ballpark. So I feel like you can then do a little bit of an apples for apples across blockchains, which is extremely helpful. And then you can at least within logic space say, for example, BNB trades slightly rich on that metric. And I would say that that's because of the Binance exchange, they have some, let's say, captive audience, right? So they've got a bit of a moat. For Solana, it trades a bit cheap. And when I compare their uses against Ethereum and Avalanche and BNB, they're basically entirely meme coin trading, whereas the others, obviously, particularly Ethereum, are a bit more of a portfolio. Yeah. So again, it kind of goes back to like what an equity analyst might do, where you'd say, if you're all in on one use case and that use case is risky, maybe your PE is lower. If you're kind of diversified, maybe your PE is slightly higher and a bit more stable. So it's getting to a similar place. Quite frankly, because the numbers match up, it's helpful. Like it's a reasonable way to do it. And it's a sort of same idea that you might use in equities. And the second is to say, if you think about blockchains as being their own countries or their own cities, I know people use that example sometimes, like the activity in that country or city is interesting to use as a metric, right? And so that takes you back to the fees paid on applications as kind of like a metric, which is interesting. And then you think about, like, as that rolls up to the overall chain and has fees and stuff like that, the net token issuance, which is essentially equivalent to like a government deficit type measure, will be impacted by the fees that are generated, which is kind of like a tax in the country system. And the fee is impacted by the activity paid by end users, which is, the kind of my GDP measure here. So it sort of works both in logic space, comparing chains against real world countries or cities. You can then compare, for taxes and think about the overall thing as like a government, which again, I think makes sense. So there's good logic, and the fact that it matches up across chains and has some similar logic behind it to like what equity analysts do, I think makes it a very usable way to think about it. Others, let's just say outright fees or those sorts tend to be so volatile across blockchains as to be basically unusable. So this one for me at the moment is making a lot of sense.
Wait, so do you factor in issuance?
Yes and no. So I think issuance matters at an extreme. So, obviously, for example, Ethereum got to negative net issuance before Denkin last March, and now it's positive net issuance. Does it matter? Yes, no. I think it matters, yes, because it was negative, now it's positive, but activity probably matters more. And I also think about it like most of these chains, like, net issuance is sort of 4 or 5% for Solana and others that, in the top 10 or so coins, as opposed to more extremes like when the earlier days, right? So I think if you're in the sort of 0 to 4 or 5%, it doesn't really matter massively. It's sort of like, let's say Amazon, for example, their net issuance on average over the past decade is like 1.5% of new stock. I think that's all fine. Like, it's not a big deal to be kind of in those low single digit numbers.
I guess the point here that's catching me up is I don't necessarily see how like a market cap to app revenue ratio is like a fair ratio to take, because I do get that the market value probably does value these together in some way. Like if Solana has popular apps, the market will value the Solana L1 token more highly. But it's not necessarily the case that the apps. It's like the apps could have a really high take rate and then settle very little data to Solana, and so there's actually not a lot of like value capture for Solana from these apps. So to me, it seems like the actual, I get that fees are very volatile, but it does seem like they're worth looking at, because maybe it's a more comparable metric to what the market cap of the asset is.
Yeah, for sure. I suspect there's an over time question here, because the blockchains are new, and quite frankly, because actual app, use cases and fees paid to applications is also new. So we're talking, a number of quarters or a few years, really, in any of the blockchains to have had enough fees paid to applications to be measurable, basically. Your point there could be very well made that over time, particularly if take rates change on applications, which I think if we fast forward sometime in the future, I think will be the case. And at that point, you'll also then start to think about, should layer ones have the premium that they have today? Yeah. So if you do the same type of metrics for the layer twos, who quite frankly are completely minting it from a cash perspective, paying Ethereum almost nothing and taking quite a bit for themselves. If you do those metrics, they are totally different levels. So the market values them completely differently. Now, partly that's because, tokens have different uses and stuff like that. But at some point, I agree with where you're going there on fees mattering more and take rates mattering more than activity. And that will sort of blow up the whole thing. Like layer ones actually probably come off a lot and application prices go up a lot. Like if we step back and sort of look at where value lies, it's been remarkably stable that the layer ones have captured all the value in a market cap sense right through. So it's sort of like saying in your phone, iOS or Apple gets all the value and the applications built on it get zero. Now, in the Apple example, the corporate can force that outcome, but in blockchain space, that's not really possible. And it's kind of the whole point of blockchain, right? Is that value should get passed down or kept by the applications. We just haven't quite got there yet, at least in market cap. Maybe it's because we haven't got like a real use case. Like maybe Uniswap could be the first version I could imagine where this goes, right? So at some point, the Uniswap the amount of take rate will change dramatically for Uniswap, and or they'll have their own layer one in scale, and that'll change the business model where we say actually it's the applications that have value, not the blockchains, not the layer ones. But I'm not sure we're there yet, I guess.
Yeah. And I think this is something that Solana is thinking a bit about with like application specific sequencing, where they're maybe trying to plan for a world where maybe some of these breakout meme coin apps say, hey, I'm driving an awful lot of value to your validators. Why don't I just keep that for myself and then move their app to their own layer 2 equivalent or their own layer 1 or something like this? I think Solana has to really make this global shared state vision very appealing and have like multiple breakout sectors where you would want to be directly composable because you're all on this ledger together on Solana. And if you go be on your own layer 1, people can't move assets there very easily, and that's like a downside. Like I think Solana has to really play into that to outrun this future where, apps want to capture more value as opposed to passing it on to Solana validators.
Yeah, I agree. It's sort of it feels a bit circular to me, right? So you have, as in most technologies, you have the layer 1 gets built, then applications get built on top. Their value was enabled by the layer 1. But then when applications get large enough, they kind of create all the value in the ecosystem. And so then you get a little bit of a breakout down the track. Interesting you point out that Solana will be trying to manage this. I think that a lot of blockchains are trying to manage this now, quite frankly. So I've had lots of conversations recently with people in the organizations behind blockchains trying to explain the story and the narrative to investors, particularly in TradFi space. They're saying, well, actually, we need to tell you what we're doing now. It's kind of like a corporate rather than a decentralized blockchain.
Today's episode is brought to you by Ledger. Ledger is a secure hardware wallet for your SOL and logins, trusted by 7 million users and securing 20% of the world's digital assets. It's built a robust ecosystem of products and services, making digital ownership more secure and accessible to everyone. Ledger's newest devices, Ledger Stacks and Ledger Flex, feature the world's first secure touchscreens, making it easier and safer to manage your Solana transactions and assets. With Ledger Live, you can seamlessly manage and stake your SOL and now your SPL tokens, all while staying secure. From Bonk and Pengu to Jupe and Ray, 130 SPL tokens in total can now be bought, managed, and swapped on the go via providers like MoonPay and Exodus from the security of the Ledger ecosystem. As always, investments in blockchain technology involve risk. Terms and conditions apply. Do your own research. I want to move on, Geoff, to maybe one of the spicier parts of this report in the eyes of listeners to this show, which is that you make the case that SOL is going to increase, over in 4 years by more than double what it is today. But you think kind of that in the near term, Ethereum will outperform Solana, which is a hot take, Geoff, I must say. Just looking at recent price action, kind of what the SOL ETH ratio has been in recent the past couple of years. Explain to me, why you see ETH going to 4K by the end of the year, sort of having better price action than Solana in the near term.
Yeah, so I should also point out that I think that Ethereum is going to underperform Bitcoin, and Solana is going to underperform Ethereum. So you're right. Within that sequencing, it's not a very positive Solana story. And so I'll give you the rationale for that. So firstly, for Bitcoin, I think that it's going to keep going up mostly on inflows from TradFi is a simple version of the story. So before the ETFs in January 2024, there was limited access for investors. Access improved after ETFs, but is still somewhat limited globally. And that's why we still see people buying MicroStrategy, for example, in global space, and NAV multiples of the likes of MicroStrategy being above 1. Over time, that access improves, and therefore flows keep going into Bitcoin over the next few years. And by the time Trump leaves office, assuming he does leave office in January 2029, I think we're at 500K for Bitcoin. Yeah, so that's basically a institutional flow game, an access game, and actually volatility also coming slightly lower over that time. And so if you think about a portfolio of gold and Bitcoin, you can easily get to those types of numbers. So that's the basis of that. Then for Ethereum, I think what they did with actually a number of changes have been mismanaged, at least in the near term. Yeah, you could argue that in the end of time, what they've done on lots of changes have been good, but like for a period of time, they're negative. So actually perhaps going all the way back to going off proof of work to proof of stake, you could argue perhaps that was less decentralized. Another Denkin upgrade in March last year, which gave power to the layer 2s, and actually even just the Pectra upgrade, which at the margin gave even more power to the layer 2s by increasing blob space. So there's a multi-year value capture problem, which feeds back to your point before about fees mattering, which I think has been mismanaged by Ethereum. And as a result of that, the value is going to layer 2s, which I wrote a note about a couple of months ago. Now, for Solana to underperform that story, I have to be somewhat more negative on Solana in a relative sense. Yeah. So I think a lot of what I just described there for Ethereum is already priced in. There was a lot of debate in 2024 about do layer 2s add or subtract value, yes, no, etc. So let's say that a lot of that story has already played out in a relative sense. I think there's still some more pain there in a relative sense, ETH versus BTC, but like you've had a chunk of it. Well, Solana, you came off the, massive multi-year lows post FTX at the back end of 2022. 2023 was sort of a comeback story, and then you had the Visa and other type linkages coming through. So Solana had a pretty sweet run, helped out by the meme coin trading to get actual activity rather than just hope. Now, I think we're post that, as we mentioned before, like sort of post peak meme coin trading activity. And so Solana's in this space, which is, what is the chain actually for? What's it about? And in a relative sense, that feels more tricky for me for the next 2 or 3 years than even the Ethereum story, which has been sort of wasted value given to layer 2s for a number of years. Yeah, so where I could be wrong would be if we jump to the new use cases more quickly, and or if the market is essentially okay to give Solana the benefit of the doubt for a long time. I think we are in that window right now where there's benefit of doubt, and then I think over time that benefit of time is given away as activity kind of goes sideways on Solana. And quite frankly, where we got to in valuation terms, you probably needed activity to be increasing dramatically year on year.
Let's say that story about Bitcoin is true, and that probably leads to some positive price action for altcoins like ETH and SOL as well. I still just don't. I don't know if there's a strong case that even if the ETH L2 take rate issues have been priced in, like what is the potential catalyst, I guess, for ETH? Like you saw this pivot where new co-executive directors of the Ethereum Foundation were appointed. They have this sort of institutional branch called Etherealize now, but
yeah,
I think if ETH is looking to scale the L1, it's probably too little too late. And I don't know if they have other options available to them that are really that promising. So like you could start taxing your L2s really heavily, but then I don't know, like the L2s are where most of the activity is, and that's, gets passed on down to users at some point. So I just feel like I see your point where it can, crypto investors can be very like all or nothing about certain coins, and maybe ETH, ETH is still a hundreds of billions of dollars asset, and secures a lot of stable coins and so forth. But like even still, I struggle to see positive catalysts for ETH as easily as I could for Solana, because there is like the L2 take rate problem is priced in, but there's also not a fix that seems apparent to me.
Yeah. So I should make a few points. So the first is on altcoin season. So you sort of touched on that. I think so. I see this altcoin season being completely different to past ones. I think because the institutionalization of the asset class and the importance of institutional flows dominate. So, although BTC, so I have BTC to 200K by the end of this year in my forecast. I think that lifts all boats a little bit, but actually others might struggle to keep up, quite frankly. So, on ETH BTC now, the price ratio is 0.024 today, and I've got a 0.02 target by the end of this year. So underperformance basically against BTC. For Solana, I think it's more a case of you've had some good news around activity. How can you keep that going? Yeah, so the story's okay, but there's no like slam dunk, if you like, not for a while. And in the for a while time period, I think it's possible that Ethereum get it together from a really bad starting place. So I think the Ethereum Foundation and Etherealize stuff is positive. I think the organization now realizes that it needs to talk to people externally. It needs to engage. And I think, quite frankly, that's super positive compared to where we were. Without that, I think Ethereum would be potentially in trouble. So I think what they're trying to do at the margin is good, but I think it's going to take some time to pay off. There could be a lucky win as well for Ethereum that could come at the same time, which is the only use case that is existing from the real world in crypto so far, which is stablecoins, like in scale, I mean, is 2/3 on Ethereum, and probably stays that way. Like, so obviously Tron has the bulk of the rest of it, but I think like once you get legislation change in the US, the Genius Act or the Stable Act, or whichever one comes through, combination of the two, there's a reasonable case to be made that Ethereum continues to dominate in stablecoins. It continues to dominate in tokenized real-world assets for now, like in scale. And so there could be this lucky window of time where Ethereum kind of messed it up with the layer twos, but then the things that matter on Ethereum just happen to outperform. So if you think about like an equity example, you think about it would sort of be like if I don't know, AI was going to have like AI producers were going to have a massive outperformance, you'd probably want to go long Nvidia versus Apple that has no AI, right? So in this case, it could be lucky that the sector that benefits Ethereum does well. I think that's a reasonably probable outcome for the next couple of years post-regulation change in the US.
So there are a lot of stablecoins on Ethereum, granted, but not a lot of trading activity always. And like, the biggest stablecoin issuer, well, I guess second biggest behind Tether is Circle, probably a big beneficiary from US legislation, but a lot of that revenue goes to Coinbase, which is one of these ETH L2s that's, taking a lot of value from Ethereum and sending very little value back to the L1. But point taken, it is an interesting case to make. And I think it speaks to a larger question that I want to ask you, Geoff, which is, I think there's like an underpinning assumption in some of these conversations where, okay, Solana, meme coin chain, youthful energy, culture, whatever, Ethereum, more serious, more institutional, that kind of thing. And I think that, Solana wants to see itself as being for both. But I guess I want to ask you where the core of that, assuming that like impression does exist, where does that come from? Is it the Solana chain outages that make it feel like Ethereum is more secure or something like this, or is it some other reason? Like, why is it that it seems like there's this assumption that Ethereum is the real world institutional kind of chain?
I think it's a little bit self-fulfilling. So Ethereum's been around for 10 years next month, which in blockchain space is like super old, right? Sort of like the equivalent of my personal real age. And so hence my recent note on Ethereum was midlife crisis. So, which maybe 10 years for blockchain is similar to midlife crisis in the real world. So I think it's it becomes partly self-fulfilling in that, like, everyone in banks like mine who, perhaps quite frankly know nothing about blockchain at all, but they've heard of Ethereum. Like, so everyone's heard of Bitcoin, like every person on the street, and every person that works in a bank has heard of Ethereum. And then like 5% of those in banks have heard of Solana because they've been trading at PA, that sort of stuff. So because of that, it becomes self-fulfilling that those that are beyond the midlife crisis in the real world want to build stuff where they think it's more trustworthy or less likely to blow up. And so you get real-world assets, for example, being put on Ethereum. You get stablecoins being put on Ethereum. You get the BlackRock BUIDL stuff being 95% on Ethereum. So it doesn't need to be more secure in reality, but it's more secure in perception. And so added to that, the Solana meme coin part, which again, I have no problem with meme coins being traded on Solana, that probably takes that perception in the other direction. Yeah. So it's sort of a self-fulfilling point. 5 years down the track, who knows? They could come together. But if I was to take something in my bank today and say we want to build something on blockchain in smart contract space, the automatic response on the other side of the table would be, well, you're going to do that on Ethereum or one of the L2s, right? And I'd say, well, maybe, but actually, how about this other chain called Solana? And the response would be, okay, well, that's for meme coins. So what are we going to do there? So there's a bit of a perception issue, which easily could change. But like today, I'd say that's what drives it.
Do you think that like just performance ends up obviating that, like that feeling that Ethereum is more secure? Because I would think, if you're a bank, you want to save money. If it's cheaper to transfer money using Solana than ETH L1, it's maybe comparable on price with some of the L2s, but you maybe don't get quite as good performance or something like this. Like, can Solana just perform its way into being an institutional name? Because I also would think that, let's just say, like, a lot some institutional crypto projects are a bit performative, right? It's like, hey, look, we, put all like this money market fund on chain, and like there's not really like much benefit to it being on blockchain, but now we can say that we're super forward looking as a bank. So, but if like real actual financial stuff starts happening and real money movement and that kind of thing, like maybe Solana just by outperforming Ethereum kind of changes people's minds.
Yeah, I think that's fair. So you made another point related to this earlier, which is the stuff that's on Ethereum from TradFi doesn't really move about much. It sort of like goes on and sits there, right? Which I think is currently accurate. So if and when you have more transactions happening, so rather than money going into Biddle's tokenized money market fund and just sitting there on Ethereum, but you have transaction stuff. So circle all the way back to our tokenized equity point from earlier. Ethereum can't do that. Even quite frankly, the L2s may not be able to do that, but Ethereum L1 definitely can't do it. And so then you have to think outside the box a bit, and then Solana gets a really good chance there. So if you fast forward where this space goes, 10 years, say, and you think about like entire exchanges being on blockchain, so play that out, right? That's not the layer one on Ethereum in pretty much any scenario, no matter what the Ethereum Foundation and Etherealize get done, right? So that looks like Solana or a Solana competitor, like which the likes of Sui perhaps, but Solana right now is in the box seat for that.
Do you think that a world because I want to ask, like, can Solana do both? Can it do meme coins and institutional uses? And like, obviously, yes, it can do both. But do you think a likely world exists where meme coins are still very popular? World leaders are still issuing meme coins on Solana, and institutions also are okay being associated with that chain and building on that chain and doing all their marketing around it. Like, do you think that hurdle or whatever perceptual hit comes from meme coins will be overcome enough for banks and institutions to start using Solana in a real way?
It's one of the tricks of blockchain, I suppose, right? Because blockchain is open source technology, the end user can go there. If this was a corporate and there was an opportunity set to, let's just play out the tokenized equity one, but to dominate the tokenized equity market at some point, then the corporate would ban meme coin trading on their blockchain in this case. Now, in the real world, that's can't really happen in blockchain because it's open source, but which is a circular way to say if meme coin trading continues like it was in January, then the tokenized equity example will go somewhere else because of the perception problem. And because this asset class is based on, it goes slowly and then it goes quickly. So this sort of network effect point, you wouldn't want to be in Solana and miss out on the golden goose of tokenized equities because you had meme coin trading going on for a while. So how the organization manages that actually could determine whether or not my price targets are too high or too low.
Geoff, I think I'm going to end it there. I think we've gotten to most of what I wanted to chat about. It's been interesting hearing just sort of your more holistic view. I think we get a lot of Solana maxis on the show, obviously, but I hope listeners found it insightful to hear someone who's maybe got a more balanced view, a more diverse portfolio in the crypto world. So thank you very much for taking the time to come on the show today.
That's a pleasure, Jack. Happy to do it.
And I look forward to hosting you again and talking about all the reasons you were wrong on the ETH versus SOL price action and so forth.
Exactly.
Cool. Well, thank you everyone for listening today. Please give this episode a like, give it a 5-star wherever you listen to your podcasts. If you enjoyed this episode, share it with a friend. Thank you for listening, and we'll see you again very soon.